I am Dr. William Schlosser, a professional forester with a bachelor's degree in forest and range management, master's in natural resource economics, and doctorates in economics and environmental science and regional planning. I have worked in the forest industry throughout Washington, Idaho, Oregon, Montana, Wyoming, and into British Columbia and Alaska. I spent 6 years working in the Russian Far East, first for the U.S. Agency for International Development, USAID, running a field office for the Environmental Policy and Technology Project in Khabarovsk, then as CEO for a U.S.-Russian joint venture. As CEO, I operated a logging concession harvesting timber from the Russian taiga, where my operation employed 450 Russian nationals and 50 expatriates to harvest timber, maintain equipment, manage resources, sort logs, and operate a seaport to export logs to Japan, South Korea, Malaysia, and China. Currently, I am managing member of a firm operated by me and my wife, Birgit, D&D Lyrics, LLC. A foundation effort of the company is an online software platform I designed and operate called the Forest Resource Analysis System Software, FRASS. I am also faculty of economics at Lewis Clark State College, where I teach courses in economics and business management. I have been a continuous member of Society of American Foresters since 1987. Forest management efforts have been bolstered by extensive research and technology development to enhance forest biometric measurement and prognoses for specific forest species growing on diverse soils, in starkly diverse climates, and within sometimes harsh anthropogenic conditions. These prognoses are best articulated as merchandised timber sorts and grades sold in competitive markets. Forest economists have made tremendous progress to articulate the value of timberland investments in terms of long time horizon investments spanning hundreds of years for each timber stand on each parcel. Economists can put value on the phrase, rotations into perpetuity. In 2010, I created the Real Price Appreciation Forecast tool, a software-as-a-service platform to discover price trends in specific markets where timber commodities are exchanged. The RPA Forecast tool displays a reserve price indicator value for each commodity expressed in the value of currency each month. Components of the timber investment horizon are based on the land where timber is grown. These lands support wildlife, fish, aviary species, aesthetic vistas, clean air, and serve as sequestration bastions of atmospheric carbon. Organizing these diverse and often competitive characteristics of forest lands into a timber investment perspective can be challenging. Forest growth and yield estimates of the productive capacity of the resource takes leadership to show the ability of the forest land factory to turn the soil, climate, and genetic resources into a marketable commodity. These are expressed into merchandised volumes through periodic time segments. Economics delivers these growth and yield estimates to match changing cost and revenue trends with merchandised log volumes to establish cost and revenue streams for harvest returns on each timber stand on each rotation into perpetuity. Expressed as costs of labor, road building, logging, trucking, overhead and administration, and combined with delivered log prices for each sort and grade, the possible returns to investment are revealed from each possible combination of harvest dates on each possible combination of rotations. FRASS is the new technology introduced to the horizon of forest land management decision-making tools, promoting higher and higher returns from the same level of investment, previously serving as the expected optimum. With FRASS, investors and managers have ability to achieve new production optimality, using the tools mostly already acquired. I made the Real Price Appreciation Forecast tool to be able to use existing data readily available to any user to be able to convert historic nominal prices and cost data into real values expressed in terms of today's currency, the US dollar. With guiding economic data collected and made available by the U.S. Bureau of Labor Statistics, the BLS, users can reshape past price and cost data into today's real terms to recognize price trends and make meaningful projections about future performance. We start with a close look at two indices collected and reported in monthly values, the Consumer Price Index and the Producer Price Index. These indices are controlled by both price of commodities and the volume bought and sold in competitive markets. As consumers, we see the blue line on a general inflationary trend since 1980, with some peaks and troughs, although neither drastic nor extended in recovery. In red, we observe the Producer Price Index, the PPI, showing the market for producers of all products made and sold in the USA, where peaks and troughs are more exaggerated as we move through time. The vertical gray lines are periods of recession in the USA. Observe how peak and trough patterns in the PPI mostly match periods of recession. The most extreme recession since the Great Depression happened in 2007 to 2009 with the Great Recession. Observe how the PPI peaked at over 200, then fell to 170 before starting recovery again. We need to look again at what started in 2014. What's up with that? Great Recession recovery was tripped up in July 2011 as a series of starts and restarts were attempted by U.S. businesses, until another fall started in April 2014. The business environment struggled to expand as new laws for healthcare took hold, introduced tax burdens were established, and international competition factors handicapped U.S.-based businesses. The new PPI drop means businesses both sold fewer products in the market and sold them for less. From June 2014 to April 2015, our economy was systemically weakening again. Then in May, we started another climb lasting only until August 2015, when another out-of-our-control event happened. The Chinese government devalued the yuan. American producers were faced with weakened exchange rates for Chinese products, making Chinese goods more affordable. More expensive American products could not compete so well with Chinese-sourced goods, so buyers diverted their purchases to lower-cost Chinese goods, including American buyers. Observing the reaction of the CPI in respect to recessions in the U.S. economy, recognizing how all indications point to another recessionary period in our economy, a period I have called the Greater Recession. Only the National Bureau of Economic Research's Business Cycle Dating Committee can officially announce a recession. They never announce one that is currently in progress, waiting until recovery movement is confirmed. They do not want to panic the populace. So, here we are, sitting without panic to anticipate the inevitable recession's announcement. What do the Chinese have to do with our Greater Recession? Look at what happened to our PPI when the yuan was devalued. Our index dropped as the strength of the yuan recovered in respect to the US dollar. They won the trade competition battle as they devalued their currency and they strengthened their economy. It seems that was good planning. How strong did it make the Chinese economy? We recognize how trading partners experience a gross domestic product convergence. As our GDP growth slowed substantially during and since the Great Recession, the Chinese GDP has been strengthening. This convergence means potency in their economy, realized through their ability to be more competitive in all tradable markets. It also means the Chinese can orchestrate price authority in timber markets of North America, New Zealand, and Russia. We now take a look into the FRASS platform, where these realities are recognized and modeled. A fully operational FRASS demonstration site is established online, featuring University of Washington's Pack Forest with growth and yield projections of merchandised timber volume, GIS data for physical site characteristics, and 30 years of monthly delivered log prices. The RPA forecast tool delivers price and cost estimates into the future. As people of this industry, we recognize the climb in delivered log prices after the 1990-91 recession. The expansion of our economy brought the derived demand to timber markets in a substantial 100% price climb in only 2 years. This is the graph of prices we are most familiar with. Only one problem: it is not real. It is nominal. Nominal prices display the prices paid on each day the transactions are exchanged. Those are in $1990, $2,000, and $2015. We restate those nominal terms into real terms by factoring out inflation and put it in terms of a reference point. In FRASS, we state those terms in today's currency value. On this chart, we express them in 2017 terms, the most recently available PPI index values. That is our business inflation indicator. Expressed in these terms of today, that post-1990-91 expansion period reveals a Douglas-fir SM and better price climb from $700 to $1,400 per 1,000 board feet in current dollar value terms. It is still a 100% price climb, but when put in this way, we recognize that our current prices under $700 per 1,000 are not even to the level they were in 1993 to 2006. Quickly, you can recognize price trends as expressed in real terms. The RPA forecast tool identifies a starting point from a period of relatively stable prices and a turning point from a significant economic adjustment incident, in this case, the beginning of the Great Recession's recovery period. The forecast establishes a prediction of prices into the future, not as a continuously climbing price, but as a Markov chain random walk with return to baseline levels, expressed in terms of today's currency. This particular price forecast was made in 2010, as the RPA forecast tool was first applied to this timber market. It is not a regression analysis applied to historic data. It was made 6 years before these most recent data were even seen. This is a reserve price indicator at work to anyone applying timber sale price contracts. We look into timber market groups like this Douglas-fir Puget Sound delivered log market region. Recognize how export 12-inch plus and export 8 to 12-inch sorts were initially established for buyers in Japan, but are bought by anyone using those log characteristic standards. These sorts top the value profile in the Puget Sound market region, cascading through domestic sorts, including pulp logs, at the bottom of this value chart. The characteristically uneven climb in predicted prices reflects the insertion of predicted inflation with the effects of the RPA forecast tool price predictions. The international sorts clearly reacted through time to the changes in domestic sort prices. Those markets responded to the Asian market crash in 1998, the recessions in 2001 and 2008. The evidence of the yuan devaluation in 2015 gives clear evidence to the position Chinese buyers hold in the export markets shown here. Recognize the gravitation open market prices show to the RPA forecast tool price predictions since the culmination of the Great Recession. Domestic sort prices for Douglas-fir are directly linked to the derived demand for the ultimate users of timber, home building. SM and better is the highest valued domestic sort in this market. Although it held prices as the market destabilization initiated in 2006, buyer efforts to recover it were attempted even in 2007 and 08, until its ultimate price collapse was seen in 2009. As you observe these figures, recognize price shocks peaking up and peaking down, but lasting only 1 or 2 months before returning to previous levels. The Douglas-fir 2-saw sort prices were showing signs of buyer-anticipated recovery through 2013, falling with the U.S. economy slowing in 2014. Then it responded to the yuan devaluation in 2015, which shook all sorts of this timber grade. Its return to the RPA forecast tool predictions show how U.S. buyers are still struggling to find strength through the period of the Greater Recession we may be starting recovery of only now in early 2017. Western red alder has been the lowest log in the price deck for decades. These logs have been traded with real price increases climbing since about 1993 to crest 10 years later. The dramatic 2006 to 2007 price skyrocket happened because of an export market for this previously low-priced commodity, as South Korean furniture manufacturers used hauled-back container freight. That market plummeted as fast as it rose, vacating the market influenced by 2008. This grade of logs is on a real price devaluation, expected to continue for the next quarter century. Arching to the western hemlock grade of logs, commonly transacted as whitewoods, recognize how export grades again dominate the top of the price list, stepping down through SM and better, 2, 3, and 4 saw, and into pulp. Again, observe the characteristically uneven climb in predicted prices. Accurate market timing can capture financial benefits by the timberland investor. Export markets for the 12-inch and better and the 8 to 12-inch sorts follow similar patterns observed for Douglas-fir, but at different price levels. Again, reactions to Chinese market performance has carried a substantial influence on these markets. In the Puget Sound market area, the Western Oregon markets, and into British Columbia and Alaska. In both sorts, recognize the 1999 Asian market crash that initiated recovery only by 2004. It is a recovery that we predict will continue to expand in this marketplace's transactions through about 2030. Along this journey, it is responsive to the U.S. Great Recession, the yuan devaluation, and even the U.S. Greater Recession. U.S. domestic delivered log market western hemlock prices are led by SM and better and two sawmill sorts. These markets have given premium price to SM and better, but occasionally flipped premium prices to two sawmill sorts. Often, the prices exchanged in this market have been responsive to product availability as SM and better was manufactured into export lengths to capture the higher prices bound for Asia. Although two sawmill sort prices were staging a recovery from 2011 to 2015, the yuan devaluation softened the competitive position in the market and prices plummeted back to the trend identified to start in 2005 and trough in 2009, the U.S. Great Recession. We can acknowledge the interrelatedness of timber markets that were once formally footed in North America, as Douglas-fir and western hemlock were joined by western red cedar, yellow cedar, 5 species of pine, spruce, and western red alder. The United States and Canada possessed the fastest growing post-World War II economies, and we wanted single-family homes built from timber products. We embodied a lifestyle coveted around the world. We sold lumber milled in North America, kiln-dried, and shipped to our nearest neighbors of Asia. First on the market was Japan. Then other ports became interested. Within time, those buyers developed their own milling infrastructure. They were attracted by round log sellers in New Zealand. Milling infrastructure grew, and in time, China built next-generation milling facilities to seek round log supplies from other countries. In 1998, I was CEO of a U.S.-Russian joint venture harvesting logs from the east coast of the Russian Federation as we sold to West Coast Japan, South Korea, Malaysia, and China. Although the Russian Federation is an obvious supplier of the Asian markets, their timber products do not include hemlock, Douglas-fir, or cedar. Interestingly, a Russian species called gedr sounds surprisingly like the English word for cedar, and many translators mistakenly called it by the Thuya name, cedar. When visited in person, you realize it is from the genus Pinus. It is a 5-needle pine supporting the characteristics of western white pine. It is Pinus coriensis. Siberia and the Russian Far East grow larch species, but the climate and physical site characteristics do not yield the large diameter seen in our climates of North America. Still, the Chinese are interested in buying timber from Russia. But getting commitment from Russia's infrastructure, like roads, bridges, tools, people to work, and rule of law, is double tough. Russia now requires timber to be milled in the Federation, so Chinese ventures have built timber mills in Russia, placed along the border so they can operate the facility and export the lumber directly to China. Time will reveal if the supply of timber quality and rule of law will support Russian logs to lumber for Chinese buyers. At this point, most of the workers in those new mills are Chinese laborers. Pivoting back to the RPA forecast tool, we have taken a brief look at a few log sort predictions based on trends established over the past 35 years. This Markov chain random walk of price predictions applies to just about any competitively priced commodity, including delivered logs, logging, road building, reforestation, forestry labor, wildfire fighting, aquatic zone management, or wildlife habitat enhancement. Did you catch that? Price predictions eclipse just timber management to include those costs and revenues encountered when managing for non-timber resources like wildlife habitat. Creativity is part of natural resources management, and that creativity applies directly to the dismal science of economics. As the RPA forecast tool is enveloped in the Forest Resource Analysis System software platform, other analytical tools such as sequential quadratic programming, SQL database administration, and the integration of GIS data with growth and yield results are amplified to discover financially optimal timber stand harvest rotation lengths into perpetuity. The structure of value reporting in FRASS enables resource managers to discover how accommodation of accelerated or delayed harvest dates affects the value of the land-based resource. Delay of the current rotation's harvest may reduce overall net present value by 3%, an alteration justified for habitat extent continuity across the landscape. Sometimes, the resource's highest asset value includes other non-monetary accommodations. In FRASS, you discover what those trade-offs are. An online demonstration site for FRASS is enabled with the University of Washington's Pack Forest located near Eatonville. Site security is enabled on this platform as users need to request access to explore and experiment. I invite you and welcome you to deploy this service on your forest lands to discover new opportunities on the path to financial optimization. Visit our other YouTube videos to learn more about the FRASS approach.